So, to give you an idea, apologies. I'll stay here. To give you an idea where I'm coming from with this concept of unbundling. So I spent probably 20 years in as a solution architect for financial services institutions. I related very much to your presentation today. I could nod at every single word you say. I'm so familiar with what you said, and I also like your proposal very much. As it happens, after working with almost all the banks in the UK as a consultant or directly, working with lots and lots of startups, trying to change things and bring them in, change various things, or I went into academia. I have no other explanation now that I finished my PhD other than I really hoped to get other ways of thinking than the dominant ones in banking and finance. And as a consequence, I did my PhD in computational urban science. So I wanted to learn from people who manage other types of very large infrastructure, complex, distributed in space, used by individuals. What do they do? They must think in a different way, otherwise we would not be able to function in the cities. So what I borrowed from them and what I intended to present, I hope I'll be able to, it's more a story. It links some of my research, but it's mostly based in my experience in financial services. So I took the following perspective. In the UK, but not only, in the US, in European Union as well, finance or financial services are labeled in a formal way as critical national infrastructure. So not only infrastructure, not only national infrastructure, but critical national infrastructure. Looking at what others do with critical national infrastructure, transportation, water, energy, and so on, is very, very different from what we do in banking. So they really have a system view or systemic view. They look at the whole world that they control, let's say. Were you able to?
The email didn't send.
Okay.
We have a different address for you to try.
Yep. So this is the email address. You can try to resend it. And then I thought that, for example, if I look at transportation, or if I look at people who work with water or do research in water, they look at the whole system and they start modeling, abstracting it in a way of understanding where the risks are. And more recently, or if we look at the what people are focusing on when they study infrastructures nowadays is the interdependence between infrastructures. So there is a lot of research about cascading failures between infrastructures, for example, between electricity grid and telecom. They are not separate, they can fail together, they can amplify the failure. And I thought, yeah, but you know, in finance, we are completely ignorant of our points of failure as a system. And needless to say, because our dependency on telecom and on the electricity grid makes us very tightly coupled with this other infrastructures. And then I thought, okay, how can I show this idea? How can I explain this idea? And I thought, okay, I'll go for the simplest part of the financial services that I hope everybody understands, which I call everyday banking. I work with complex finance, but I wanted to go to the basics, hoping that it will raise a sensitive, it will it will make the regulators react or see the problem. So as a consequence, I said, okay, how do I explain these interdependencies, which I cannot show you. I'm really sorry. I will use my
Maybe in a minute.
yeah, my hands a lot. So imagine, so these are usually represented as layers of network. So the thinking in the modeling comes from where you draw the borders around the network and how do you arrange them like a lasagna in a way, you know, layer of networks, and what information you can directly link between these networks. So I said, okay, so if we talk about the way banking works nowadays, what I call everyday banking, so the current account, I focus on the simplest product. Banks offer, retail banks offer these products, and the banks are linked through the financial infrastructure, through the payment schemes, and on top of everything is the RTGS. And I also pointed down, okay, how people can have access to these current accounts, because it becomes more and more a more diverse. New channels appear, new players, and so on. So I took layer by layer and thought about it, modeled it a bit, and so on. So when I talk about types of unbundling in the abstract, first I refer to an unbundling which was very much discussed in the conference in many talks. A separation between money, payments, and banking, which usually were tightly together. Even if we think 10 years ago, the idea that you have payment systems outside the control of the banks would have been absolutely inconceivable. And also the evolution of particular payment channels for different types of money which are available to individuals. So we are not talking, you know, central bank money or other forms of money. That's something that is happening quite a lot. And this is usually accompanied by regulation, of course. So the central banks usually allow non-banks to have accounts with the central bank, which was not possible, at least in most countries that I know. And this, I think, so this is happening in China, this is happening in Kenya for the M-Pesa. In the UK, we have something which is called an omnibus account, which is intended to be used for access to the financial market infrastructure by the non-player. But I think this is very much discussed in other sessions. A type of unbundling that I was very much exposed to is what happened to the architecture of the banks. So as a technologist, working with the whole architecture of a financial institution was very much a daunting. Yeah, I never expected to do the talk without images. A daunting task, because the mega banks have actually thousands and thousands of systems. People, especially who do not work in banks, have the impression that is much simpler. They think, but what do you have there? You have some transactions and some products. And I'm like, yeah. Did you look at the mergers and acquisitions of this institution? Did you look at the diversity of the products and so on? Oh, wow. Yes, that's my first slide. And by the way, this is a place of banking in the UK. I'll take the... and this is a parking lot in Wales, where I waited for 2 hours for a mobile bank to come, and they didn't. But so I'll jump straight where I am now in the presentation. So basically, when I was speaking about everyday banking, I was thinking about this world. You have a financial institution, you're a client of that financial institution, you have a multitude of channels now, and you will have even more later on. You have some payment schemes, they're different from country to country, but essentially you find more or less the same thing. And there is another bank on the other side, and people have a choice how they receive those money. If I do this in 3D, so the same thing, but in 3D, on top I have the RTGS, the settlement system, the central settlement system. All the other payment schemes are linked to it. Underneath you have the banks, which are linked into the payment schemes. And each bank has its thousands and thousands of systems, but essentially they are represented through a point linked to the payment schemes. And underneath is the reality of individuals and, let's say, SMEs, which need to have access to their own money, to their own core accounts. When I looked at this, I looked from the point of view of resilience and failure, and I thought there are so many ways that this could fail. And there I proposed some categories, but actually we can structure it in so many ways. So basically what I'm saying, if you have a failure of market infrastructure, like fast payment system faults, it's in the first layer, green layer. So when that fails, basically the whole thing underneath becomes disconnected. When you have failures in the yellow layer in one of the banks, maybe the other banks function, but as it works in the UK, the banks have a regional footprint. So, for example, if RBS fails, the whole Scotland is in the dark because there is no other bank there, just RBS. And of course, the failures due to cyber attacks, which could affect various channels or various banks, or and then the important ones, which are not shown here, the failures due to other infrastructures on which bank depends. So we had failure of Sky, for example, which is a telecom network. Everybody was affected. You had a contract with Sky, a mobile phone, or you couldn't access your bank. This is a problem I'm working on. So is not yet finished. So it's a problem of resilience of this whole system, because there is an assumption that the whole thing is solid. Now, me from the inside as a solution architect, seeing all these banks, I can tell you that it's not solid at all. And actually, I don't even know how people sleep at night, because it's very, 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 very sellotaped. And then you think, okay, even if I have abstracted at these three layers, connections, institutions, and individuals and their way of accessing things, there are so many points of failure and so many scenarios where you remove some points and actually you bring the whole thing down. And if you read the regulation, either the European regulation called DORA, Digital Operational Resilience Act, or the UK version of this, they are, in my view, childish, because they completely ignore the complexity of this world. So they have measures like, we will appoint a person who will investigate and audit the resilience of a bank. And they're like, yeah, good luck with that. I mean, what type of competence, what type of mind do you think that person has in order to comprehend or analyze the complexity of a bank or ensure resilience? We do not have measures, definitions, even an idea about the resilience of our system, and no interaction with the other infrastructure. So, for example, I talk with national protection I think, agency, which is in charge for critical national infrastructure. And their assumption is that financial services are self-regulated and they take care of their own resilience. So for the other infrastructures, they have studies, interdependencies, modeling, and financial services is completely outside of it. So this is the part I spoke about. Then when I talk about modularization or the technology modularization inside banking, basically this started for me with this drawing, which is from a book called Only the Paranoid Survive by Andrew Grove. He was a CEO of Intel, and probably he is rolling now in his grave for very recent reasons. But he said, when I was a CEO of Intel, there was this transformation happening that I didn't see. I see now looking backward. So this was, I think, in the 80s and between 80s and 95. So he said, we had these vertical companies in the computer industry, and they would do everything from sales, distribution, application, operation system, computer chips, and so on. And while I was a CEO of an Intel company, which was part of these computers, the industry transformed from these verticals to horizontal. So an entire industry for chips, computer operating system, and so on. So I was thinking about this probably around 10 years ago, and I thought what will happen in banking is very similar to that, meaning from these high verticals doing all sorts of things, I see, and I could see at the time, horizontals appearing where you have transactional systems, pure transaction systems. You could have, you have specialized things on top which are mostly focused on types of clients. They would know how to approach a particular type of client with a particular type of product, which you would say is a skill. The product would be, as Vil said earlier, it's an algorithm. It's a product with a function which functions in a certain way and generates transaction in a predictable way, in a way. What is very much missing in the industry is that ability to connect to those places, let's say, which can hold your transactions, which can generate the algorithms for your product. So while I was thinking about this, I thought, okay, but how this looks like internally? And this is a very small network from a real bank. So the bank has more than 4,000 systems, and here I have 200 systems. And I created a network which is not a directional network. It just shows in general how systems are connected. And what was immediately visible to me was what any architect in banking would know, is that the core banking systems sit at the center of the network. So you would guess that here you have the central, the core banking of the system. And then what I liked about this as an architect is that you can apply modularization algorithm to the network, and it identifies chunks of architectures that now function together and in sync. This is very helpful for the much needed transformations that we need to do to banking architecture, because you cannot handle, you cannot deal, you cannot transform 4,000 systems in one go, but you can chunk the elephant in small pieces and deal with it as such. So that's another type of unbundling which is happening now. Another type of unbundling, which is, let's say, more mundane but is very real, is what I call the spatial unbundling. And this is something that I stumbled upon, and I have to say that in 20 years of banking, I didn't think about it at all. So I define this in opposition with a digital unbundling, which we praised for so many years, and we said, look, I want my own little pieces of financial services, and then I assembled on my phone. The reality of many people in the UK is that they don't do that. So we are hyper users, super users of financial services to do this digital rebundling on our phones. But in reality, most people end up in a very scattered situation where they do each basic banking service somewhere else differently in space. So I will show you how this looks like, because I played with this idea for a bit. So what you see here, for example, on the left-hand side, those are places where people can do banking in Wales. Those little areas, blue areas, are isochrones in 1 mile direction. So let's say people, if they start going on the road for 1 mile in any direction possible, that's the footprint for 1 mile. So all the empty space, it means that they have to travel much more. The red points are actually places which are open less than 30 minutes per week. So the reality of people who don't reassemble digital services on their phone is that actually they travel quite big distances. And I'll show you just briefly a view, simply because it uses methods from transportation, and probably it's not your focus, but I want to show you the idea. So how banking looks like in the UK right now for these people. So first, it happens from the post offices, and the post offices could be in very random places. So that's usually a van like this, which stops in an unmarked place, or it's a church. So a priest in an area without any banking facility opened something in his church, and this is in the back of the shop. And in terms of banking, okay, that's supposed to be the other way around. It also looks like this. So there's these vans opening in parking lots and so on. The spatial unbundling looks like a trip like that, which is a real trip for a real person, and it could be over 40 kilometers long for something very basic. So they end up visiting these points at various during the week, just to be able to withdraw their pension or to pay some bills or things like that. In order to measure how this looks like for the UK, I used what in transportation call an attractiveness function. So you look at how attractive a point is to go there. So this is very much used for shopping centers, for hospitals, and you attach some characteristic to a place to make it attractive. So it goes down with a distance, it's neutral up to a certain distance, and beyond the certain distance is like it doesn't exist. The lines there, which are calculated over 4 years, in fact show so it's a spatial access indicator to any banking facility in any way, shape or form, and it shows a move towards the right, which means they are open less and less times, and they are more rare, in fact. So a map for Wales, for example, would show you how these points disappear. So these are the points, and as they disappear, the area become yellow. Basically, you have no face-to-face access. Calculated up to 2025, I could say that we don't have a network anymore for face-to-face banking. And you could say, yeah, who cares? We have digital banking. But in reality, we have a big section which doesn't function on this way. Then, just to give you another idea, when you look at digital banking, the first assumption is that you have access to the infrastructure, meaning you have a phone, you have money for a data contract, and there are telecom pillars which allow you to connect and do some banking. By mapping this as well, I learned that the telecom pillars usually are along the roads, and in the large cities, working places. So if we do a cluster analysis, a very simple analysis on that, we see, so for example, the green ones are places where people work, and the blue ones are places crossed by highways, so people transit on their way to work. Rural areas and poor areas have very, very light infrastructure for accessing mobile data, and places where people reside, which are the most places in Wales, are even have even lower things. So this was a perspective of infrastructure. Do we have the infrastructure for these people to do banking? So what is my perspective, or what is the next step? That one was a study which inspired my approach. It's a network modeling of an outage, telecom outage in Italy, where they modeled how these networks collapse together, energy and telecom. And I take the same approach for modeling the resilience of everyday banking in the UK. So that's the that's the story, with and without slides. Yeah, questions? Yes?
When you speak to the banks, our experience is that, you know, their booking engine is really stable. So I actually would be interested afterwards to see where the booking engine lives in your graphic representation, right? So my impression is that the booking engine, despite the terrible, you know, architectural environments, because it's the source of truth for the bank and also how they report to the regulator, and the booking engine drives e-banking and it drives other things. It seems to me that the booking engines appear to be well locked down, you know, lots of redundancy, you know, all these things that indeed, you know, that booking engine requires. It seems to me that is the most reliable piece of a bank. Would you, I mean, based on your experience, would you kind of agree?
Yeah, but by booking here you mean that the transaction system which holds the
record of debit and credit of the bank itself and of each individual customer.
Ah, okay, that's a bit higher.
The ledger.
That's a bit higher. So in my view, that yeah.
Yeah. So the ledger. Yeah. What is your impression? I mean, no.
No. So something that banks don't acknowledge is that the fact that they had a system which was called core banking or general ledger, which is a bit down the line, which are systems which existed there for decades. And the way they catered for the new functionality, which comes from the fact that our society becomes more complex from the financial point of view, was by adding systems to this. So the network grew, in fact. So if you look at it simply as a network, they attach nodes to this central node for them. From my point of view, as an architect, it's wrong to say that your core banking system is just your original point, because what you ended up having is around 150 systems around that, or around the general ledger, which function like one. It's like they have a heartbeat and they function like one. And yes, it's true that they super protect that core node, because in their mind, that's the system. But I tell you, that's not the system. And the system, it's much bigger. It changed the boundaries, if you want. Okay. And very, very few, if almost nobody, acknowledges that the problem needs to be reframed in order to be solved, you know. As for how good the general ledger is, no, by no means. Between the core banking system, where you said that you calculate that fundamental reality, which are your events of your product, which is the only thing that you could trust. By the way they move this in the next warehouse and in the next warehouse, and they aggregate it and they eliminate lots of information which would help you do things. In general ledger, you mean anything you want. I can tell you in which banks you find now Deutschmarks and French francs in their general ledger, even if the currency doesn't exist anymore. And it's a place where at the end of every month for decades, they have tens and tens of people trying to solve breaks of billions of dollars. Yeah, so it's holy because they hold it holy and they are afraid, but it's not good. It's not, yeah.
If I would reinterpret what you say in my words, yeah, exactly. The calculation happens on every financial contract.
Yes.
And it's a historization. If you want to go back, okay, you can go back. You can place yourself a data. And the balance sheet at the end is only a query.
Yeah.
It's a summing what you find in
yeah.
all your query and grouping it by whatever you count.
Yeah. Yeah.
Do you see it the same way?
Yes, absolutely. Yes. Yeah.
But it's true, I mean, to you, Ralph, it's a stronghold, but that's just a bad thing for the bank.
Yeah.
The general.
Yeah. Okay. Thank you.